Africa.
Yeah, I can start. All right, so thank you guys. Welcome to our presentation on finance and decision making. This is group 2, and I am Grace Koza and my colleagues Samuel Kalua and Maureen Omoy. So our presentation will focus on the financial performance evaluation of the National Bank of Malawi, PLC. The presentation outline. So the presentation will look at the introduction, will introduce the National Bank of Malawi, PLC, the bank's shareholding and services. We'll look at the financial markets and subsidiaries, its mission statement. We'll tackle the objectives and strategic plans. We'll also tackle the financial analysis and finally give the recommendations and conclusions. So as an introduction, the National Bank of Malawi is one of the largest and best performing financial institutions in the country. The bank was established in 1971 through a collaboration with Barclays and Standard Bank. However, the first bank, the Barclays, left the collaboration in 1982 and followed by Standard Bank in 1996, making the National Bank a sole existing entity. So the bank has a total of 51 service centers, where 33 are in Malawi and 18 in Tanzania. The bank has 135 ATM machines, 812 fast-serve agents. This makes its services available across the country and beyond. So as we can see, this is contrary to its main competitor, which we'll talk about later, the Standard Bank, which only operates in Malawi. So the bank has a total of 1,000 employees and holds the biggest stock exchange among the commercial banks. The bank also scores higher in terms of efficacy and profits, with a 34.21 billion kwacha in the year 2021-2022. So in terms of the bank's shareholding, the major shareholder is Press Corporation PLC with 51.5 shares, the Old Mutual Group with 22.4 shares, members of the public with 25.7 shares, employees with 0.4% shares, making a total of 100% shares. The bank provides a number of services. For example, it offers corporate banking services, which mostly deal with working capital, agricultural loans, bonds, and guarantees. It also offers SME, small to medium business enterprises. It mostly offers financial loans. This can be long or short-term loans. It also provides personal services, which includes customer accounts, loan facilities, and electronic card services. Lastly, the bank provides rates and tariffs, mostly to do with foreign exchange and interest rates, which are available on the website and are updated on a daily basis. Furthermore, the bank has financial markets, and as per definition, financial markets are defined as any mechanism for trading financial assets or securities. So these financial markets are important because they provide funds for the operation of the businesses to grow. So for National Bank of Malawi, as a commercial bank, it has 3 main financial markets, which include commercial banking, pension administration, and stockbroking. So as I've said, it's important to have financial markets because They provide government institutions with a chance to save and invest regardless of their sizes. So my friend will take you through the rest of the slides. Thank you.
All right. Hi, everyone. I'm Maureen Demoya, part of the group, as Grace mentioned. So I'll continue with the presentation, and I'm going to talk about the subsidiaries that the National Bank has. So the bank has a total of 8 subsidiaries. These include the National Bank of Malawi Capital Markets Limited, with 100% control and handles investments and fund management. We also have National Bank of Malawi Securities Limited, which also has 100% control. National Bank of Malawi Nominees Limited has 1% control and handles holding and investment as nominee. We also have Stockbrokers Malawi Limited with a 75% control. National Bank Bureau to Change Limited with 100% control. National Bank Pension Administration Limited with also 100% control and handles pension and administration. Continuing to that, we also have National Bank of Malawi Development Bank Limited, which also has 100% control and handles small and medium enterprises and long-term financing. And finally, we have Akiba Commercial Bank, PLC, which has 60.48% control and handles banking and related services. When you talk about the vision and the mission of National Bank, its vision is to be a world-class financial service provider and a leader in the Malawian banking industry. And the mission is to provide innovative and competitive financial services that meet the needs of our customers, and also to create value for our stakeholders while adhering to the high standards of corporate governance, social responsibility, and environmental stewardship. National Bank of Malawi's objectives include the following. The first one is to provide a range of banking products and services that meet the needs of all segments of the market. The second one is to maintain a strong and stable financial position through effective risk management and sound business practices. The third one is to use technology to enhance the efficiency and effectiveness of their operations and service delivery. Also to attract and retrain and develop a highly skilled and motivated workforce that is committed to delivering excellent customer service. The other objective is to contribute to the economic development of Malawi through financing of key sectors such as the agriculture sector, manufacturing, and also infrastructure. And finally, is to operate an environmentally sustainable manner and contribute to the well-being of communities where they operate. So according to the chairman's report from the report that we are dwelling on, there were some strategies and prospects. So these strategies that were recommended were the growth strategy, which talks about the expected growth of 4.1% in 2022, which is underpinned by anticipated increase in the mining and quarrying, manufacturing, and construction sectors. Then there's the risk management strategy. The chairman identifies several downside risks to the growth prospects, including the uncertainties in the evolution of the COVID-19 pandemic and its containment measures, climate change, and war in Ukraine. The other strategy was inflation management strategy. Pressures on the inflations are likely to continue, mainly arising rising energy prices and global supply chain disruptions worsened by the war in Ukraine. And then there's the acquisition strategy. The bank has completed acquisition of a controlling stake in Akiba Commercial Bank in Tanzania, and negotiations are ongoing to acquire a further stake to reach the intended target of 75%. And finally, there's the business resilience strategy, where the board expects a continuing challenging operation environment due to various factors, but the group is expected to sustain its inevitable performance through its ability to leverage on its core strengths, addressing challenges and exploit opportunities in the market, the hostile environment standing. I think I'll now hand it over to the next colleague who's going to take us through the financial analysis of National Bank.
Thank you, Sima. And financial analysis of National Bank, we started by sourcing data that we used to analyze this PLC. The data was collected from the 50th annual general meeting booklet, which had the financial position statement, comprehensive income statement, and cash flow statement for the year ending 2021, of course, compared with 2020. Yeah, so the analysis of the data, we use the vertical analysis as well as ratio analysis. On the vertical analysis, briefly, each item in the income statement is stated as a percentage of the revenues. So once we had done that, it was noted that from the previous year of ending December 2020, there was an increase of 3.5% from 46.1 to 49.6 for the National Bank Group. This means that the company improved within the 2 years. On the ratio analysis, the ratio analysis includes a number of ratios that are grouped into a number of groups, which measure profitability, liquidity, working capital, and investment status of the PLC. Some of them have been calculated as indicated. Yeah, so on profitability, we started with the return on capital, which showed that it had improved from 2020, from 19% to 23% in 2021. The net asset turnover also improved from 67% to 78%. Net ratio net profit ratio, this one barely changed from 29% to 30%. The gross profit ratio, this one also improved a little bit from 42% to 44%. So in terms of profitability, we think that the bank performed well, and it showed it was on a good trend within the 2 years under evaluation. On the liquidity and financial status, we used the gearing ratio, which showed that it had reduced from 12% to 7% within the 2 years. The interest cover had also reduced from 290 to 50. The current ratio barely changed and remained around 1.2. And the acid ratio as well barely changed and remained at 1.2. So for us, we believe that the liquidity and financial standing for the company is good, much as it hasn't really improved that much, but we still think that it is good because all the ratios that we're getting are acceptable. The third tool that we use, which is evaluating the working capital and efficiency ratios for the company, we found that it remained unchanged at 0.14. That is the fixed asset turnover ratio, while the working capital turnover changed from 0.67 to 0.78. As a result, we believe that the efficiency is improving and is currently good as well. On the investment, which is the last tool that we used, we checked the dividend yield. So we found that for the group, the dividend yield improved from 105% to 114 within the year, which we believe that it is good for investors. While the earnings per share showed minimal change from 17.91 in 2020 to 17.13. Of course, it reduced, but very minimal, which means that the value of the company just slightly lost some value. So after using these tools, okay, the final tool that we used in the investment was the earnings ratio. So we noticed that the National Bank earning ratio decreased from 0.96 at the end of 2020 to 0.71 at the end of 2021, which means that the bank's investment strength was reducing. Yeah, so our interpretation is that despite the company's investment ratios showing that it's not really improving for the investors, the other indicators showed that it is a company that is well performing, and we believe that the investment ratios reduced because of the environment, the challenges within the environment, the COVID and other business challenges that took place in the year. Yeah, so we also compared the statement with the industry performance. Mostly we use Standard Bank as an equal organization that is in the same commercial banking business. It was noted that National Bank made 34.1 billion in profit after tax, that is at the end of December 2021, which was representing 52% profit increase. But in the same year, Standard Bank made 39.2 billion profit after tax, representing also a 58% increase. When we're also comparing the dividends, we noticed that National Bank dividends that were shared were 11 billion with the 23.56 per share, while Standard Bank dividends was shared at 85.23 kwacha per share. So from this preceding, you can see that for the investor actually would pretty much prefer the Standard Bank investment, considering that the return on the investment to them as shareholders is higher. In the same vein, actually, that is the reason why Standard Bank was awarded as best performing bank by Bank Magazine. Yeah, so as a recommendation, we suggest that we noticed that the bank had registered the 9,500 million loans that were written off to defaulters. This actually eats into the profit margin of the company and reduces even on the return on investment. So to improve, the management must consider an increase in the loans SMC with reduced interest. A reduction in bank tariffs will also encourage people to open accounts with the bank. This has been proven effective by Standard Bank performance, where the removal of some tariffs led to an increase in revenue. So we would conclude that they sort of get some business pointers from other competitors. Yeah, in conclusion, the bank is profitable despite, the National Bank is profitable despite the challenges in the investment, and it is still recommended when investing in, because it has a large customer base and it has chances of growth. There's also need for improvement, but there's need for improvement on to make returns for the investors worthwhile. Otherwise, we have an appendix, of course, where we did the calculations. Thank you, and if you have any questions, please, this is your time. Thank you.
Yes, Kevin.
Okay, thank you for the presentation and analysis of the banks. My question is just to understand the intro of your presentation. Somehow did indicate that national bank profits. In the way, slide number 17, we did in light that there was a poor bank. Profitable.
Kelvin, I think your voice is so low. We can't hear you. I don't know if it's just me.
Yeah, it's low indeed.
Can you hear me now?
Yeah, better.
Yes.
Okay. I'm saying in the intro part of the presentation by Sama did indicate that the bank made profits. Got to the ratios, the analysis. Presentation also indicated that I think slide number 17 they show that the bank uh, had challenges and there was a poor performance. Finalizing, he did conclude to say the bank is profitable. So I'm kind of confused on whether the bank is a profitable bank, but the prior year they made losses, or I don't really understand. I just need more.
Kelvin. Sima, can we go to slide 17? Yeah. So, Kelvin, thank you for the question. The bank did not make losses actually. There was a profit actually, a 34 billion profit. So that's why we use the ratios to see into detail what this profit means. So, for example, for the working capital efficiency, I would say we are comparing that profit or revenue with the assets. So it is showing that it has barely changed. Not that they have made a loss, but it has barely changed comparatively with the previous year. It means if you compare the investment that they put in and the amount that they have made this year, you compare with what they had put in the previous year and the amount that they have made, it hasn't changed. So there hasn't been an improvement on the fixed ratio like assets. On the working capital, generally, there's been sort of a small improvement. But when it comes to the actual investment now that the shareholders are looking for, how much money they are getting from their money that is already in there, that's the one that we're saying, for example, the earnings per share hasn't really improved. It has actually gone down because the previous year it was 17.91. The other year, the 2021 year, 17.13. It's a minimal change, but for shareholders, it is still a lot. Yeah, so what we are saying is that the company is not really making a loss, but hasn't really improved in terms of the investment. I don't know if that has given some clarity.
Yeah, maybe just to add on that, I think just to clarify that even though there are those challenges where there's some reductions, but the profit is still there. That's why we're saying that the bank is still profitable.
Okay, happy from my end.
Thank you.
So maybe just a follow up on the same.
Yes.
So if I got you clear on the very last slide, you were providing the net profit information. It was showing that the National Bank scooped something like 52%, and the Standard Bank went away with a net profit of 58%. So in terms of in terms of you as an analyst, analyzing the financial statement, what do you recommend the investors? I mean, would you recommend the investors to buy shares in National Bank and not in Standard Bank?
Yeah, Grace, do you want to take that?
Yeah, you would want to invest in Standard Bank because of the dividends per share. However, you can also choose to invest with National Bank because of its other attributes. Like, for example, it's almost available anywhere, and it's you can also it has very friendly online attribute services. So you can also choose to invest with National Bank. Thank you.
Thank you.
Yeah, maybe I can just also add there. Yeah, so what has happened is that, for example, the 52% that was indicated there, it means that from the previous year, compared to the 2021 year, National Bank had increased this profit by 52%, while Standard Bank had increased this profit by 58%. And even the actual profit itself was higher than the National Bank one. So as my colleague has said, ideally you'd want to invest in Standard Bank because that's the one that is making a lot of profit, as well as the dividends as also share the dividends per share, which is 85.2%, 23%. But the other issue that you should also know is that the prices of the shares are also different. So for the shares for Standard Bank, we haven't indicated here, but they are much higher, the actual price of the shares, as compared to the prices for National Bank. So National Bank is still profitable and is still a worthwhile investment organization. Thank you.
All right, our modulator is reminding us that time is up. I think we've gone over our time. So unless there are any other questions, I think we can conclude. All right, thank you very much. I think this marks the end of our presentation.
Thank you, Siemens Group.
Thank you. Thank you.
Thank you.